Hey everybody, this is Kent Stewart with Insurance Professionals of Arizona here in Mesa, Arizona. I'm back with another video to talk to you a little bit more about the homeowner's insurance policy and some of the coverages inside the homeowner's policy that I think you should be aware of. You know, when people come in to talk to me about insurance, they always ask me if I can get them a better price. And of course, we excel at getting people a better price. But we also want people to take 1 or 2 seconds and think about the actual coverages that their money is buying and why that's important and how it might impact them down the road. And then they may not think that price is the most important thing. There's a great saying I heard once that price is only an issue in the absence of value. And some policies provide better value than other policies. So we not only think about price, we actually think about protection as well. We want our clients to be properly protected. It just so happens that as an independent insurance agent, most of the time we can still do that at a better price than they're paying before they come to us. So they get better pricing and better coverage. So let's talk about the internal limits today on personal property inside the homeowner's insurance policy. First of all, what is personal property? Personal property is all your belongings inside the home. If you turn the home upside down, anything that falls out is really considered personal property because it's not permanently attached to your home. So the homeowner's policy has coverage A, which is the dwelling itself, and then a sublimit for personal property coverage B. That is usually a percentage of coverage A, your home, whatever your home is insured for. So for instance, to make the math simple, if your home was insured for $100,000, the typical homeowner's insurance policy would give you between $70,000 and $75,000 of personal property coverage. On a $500,000 home, that's $350,000 to $375,000 for personal property. Most people would say that's plenty of personal property coverage in my homeowner's policy. Now, what they don't talk about very often is the internal limits on items such as jewelry, furs, watches, all those valuable items, firearms, securities, or money, the internal limits on the policy for theft. So if your house is robbed or you're out and about and something is stolen, let's say your wedding ring that you paid $20,000 for is stolen, well, the internal limit on jewelry inside your homeowner's policy, if it's unendorsed, and what I mean by endorsement is your policy hasn't changed, it only has the basic coverage that you got when you bought the policy. Typically, the internal limit on jewelry for theft is $1,500, $1,500. You can imagine if you filed that claim for that $20,000 wedding ring, you're not going to be very happy when you get a check from the insurance company for $1,500. Now, how do we fix that? Well, you can endorse the policy or change it and increase that $1,500 limit up to sometimes $5,000. Now, again, $5,000 for a $20,000 ring still is not enough coverage. The better way to do this would be to schedule that item. Diamond earrings, necklaces, jewelry, rings that are valued at, more than $1,500, $10,000, $20,000 and up should be scheduled on the homeowner's policy so they get their own specific limits, which will also include mysterious disappearance. That way, if your ring is stolen, there's 2 ways to get that scheduled on there. Number 1 is agreed value, where you get the actual value that you state the ring is worth. So if it's $20,000 and you have it scheduled for that agreed value of $20,000 and it's stolen, you get a check for $20,000. If you don't put the agreed value on it and you just get the replacement cost on there, the insurance company will go out and replace the ring with a like, kind, and quality ring at whatever dollar amount that is cost them to do that. They will pay that. So it could be, if it's a $20,000 ring, it could cost them less, it could cost them more. Their duty is to indemnify you, which means to get you back to the position you were before the loss. So if you had a ring stolen, they have to replace the ring. So the best thing you can do with valuable items like that is schedule them on your policy to make sure you have the appropriate coverage. If you have questions about your policy or you need help, give us a call here at Insurance Professionals of Arizona. We'd love to talk to you about coverages. Our number is 480-981-6338. Hope you found this video useful. If you don't call us and you do have valuable items that aren't scheduled, you might want to call your insurance agent and make sure they get that taken care of for you. If you didn't have that discussion when you bought the policy, you might have a coverage gap there and an exposure that you're unaware of. Thanks for watching. Have a great day.